Ugh, what a day, folks. AMC is up 20% at highs today. Ortex reported that short sellers lost another $488 million on this day. Just devastating. Imagine the yacht industry. How many people aren't going to be able to buy their third yacht this summer for Monte Carlo? Jokes aside, AMC has continued to bounce in that general $40 to $60 region. Very intriguing because on Saturday's video we talked about how a gamma squeeze is very, very likely to happen if we get a strong breakout into the 60s, and the idea that AMC just coincidentally happens to find a lot of selling pressure when it breaks above 60 and just can't seem to get much higher than that. It's almost like there's an algorithmic wall of sellers ready to pounce on any potential liability of this going much higher than 60. It's almost like the algorithms are anticipating a gamma squeeze. Anyways, in this video, I want to take some time to break down what's going on with AMC. And what the heck is the deal with these reverse repos that people are talking about? With a lot of scary / exciting charts circulating, showing that reverse repos have gone exponentially higher, and with the due date of over $700 billion worth of these coming due in 10 days, people are speculating on what that could mean. And I want to talk about what it does and doesn't mean for AMC stock. Could this mean that AMC is going to squeeze a lot faster than anticipated, or is this just another thing that's circulating? And of course, we'll also be updating on the market condition and other plays as well. And the only thing I ask of you in return is that you hit that ravishing like button, and also don't forget to subscribe either. Okay, let's go ahead and start with Bitcoin and Bitcoin miners today. Bitcoin received huge inflows today as Elon Musk clarified that he will allow Bitcoin transactions for Tesla once again once there's a quote confirmation of reasonable 50% energy usage by miners with positive future trend. Now, in terms of what he's defining as a confirmation or what he's defining as reasonable, he's leaving that up to our imaginations, especially considering the decentralized nature of the Bitcoin network. That's like the whole thing about Bitcoin is decentralized. You can't go up and call GE and be like, are you using clean energy? And how much of Bitcoin comes from clean energy right now? Well, it's different depending on who you ask. A 2019 study from CoinShares found that the Bitcoin network gets 74% of its electricity from renewable sources. An ARC analyst says 76% of Bitcoin miners are using renewable energy. And in terms of pace, Iceland, a country that uses 100% renewable energy, also happens to be one of the fastest cryptocurrency mining markets. I think that in reality, if you take this tweet at face value, it's really ambiguous enough for him to do whatever he wants. Reasonable seems to be up to the Musk man. I'm a huge fan of Elon, but I like to say if you live by Elon, you have to die by Elon too. You should be investing in things based on your own conviction. But anyways, nonetheless, the tweet instigated buying pressure into Bitcoin, which accelerated it from the low 30s to 40 overnight. Keep in mind that the reason that Bitcoin's movements are so damn violent is because of the presence of leverage. The funds of hedge, also known on the streets as hedge funds, leverage their movements in Bitcoin algorithmically. It leverages uptrends and it leverages downtrends as well, accelerating both upward movements and downward movements. That's why so much capital goes in and out of Bitcoin during every single little stupid catalyst. But let's be real, I've been pretty stoic when it comes to Bitcoin and Bitcoin cycles. My conviction is that cryptocurrency is going to continue to have more and more usage and that Bitcoin is going to be one of the big winners in that industry. I'm accepting of the fact that Bitcoin is going to cycle up and down dramatically over the upcoming years, but at the same time, I have a lot of conviction that in the end, it's going to be at a higher price. That's allowed me a lot of patience, and it's also transferred to my outlook on Mar and Riot, who both did very well today. Okay, AMC. So let's start with reverse repos. You've probably heard this topic of reverse repos going around. Maybe you didn't fully understand it. Maybe people have had different definitions. Maybe there's just a lot of different misinformation going around. But give me a few moments to actually beat this into your head so that in the future, when you hear the phrase reverse repo or repo, you understand what the heck is going on. Now, what I'm hearing from a lot of folks is that because of reverse repos maturing in the next 10 days, about $700 billion worth, the idea is that many hedge funds are going to have to come up with tons of money to pay back the Fed. And if hedge funds have lost tons of money on bad bets with some of the meme stocks like AMC or GME, then they may have to close out of their short positions early or get margin called, which of course would cause AMC and the likes to skyrocket dramatically because the short squeeze would be accelerated. It would come a lot sooner than expected. And we'd have a concrete date because 10 days from now is when those repos are due. But unfortunately, that's not exactly what's going on, although this could be a positive catalyst depending on how you look at it. Okay, so bear with me. A regular repo is when a branch of the Fed buys securities from a bank with a set date at which they're going to repurchase them. In other words, in buying these securities from banks with agreements to repurchase them, the Fed is essentially giving them loans, and the bank is essentially giving the Fed collateral, and the agreement is that the loan will be paid back to the Fed and the collateral will be paid back to the bank. Okay, think about this in terms of a pawn shop. Let's say you go to the pawn shop, you need some quick money, so you take your wife's wedding ring to the pawn shop. When you're at the pawn shop, a guy named Chumley comes out. He says, I'll give you a loan for $10,000 in return for this wedding ring as collateral. You give him the wedding ring, he gives you the $10,000. Then later on, you come back with $10,000 plus interest. You give that to Chumley. Chumley then goes and gives you the wedding ring back. Similar to that, in a repo, the Fed is acting as the pawn shop, and the bank or hedge fund or whatever institution is acting as the person that needs the loan. Eventually, they get back their collateral, they get back their ring, they get back their securities, and they pay the Fed the loan amount plus interest. Now, obviously, the mechanisms here are different, but the idea is the same. And now a reverse repo is when the Fed sells securities to a bank. And the Fed says, I'll buy back those securities at a later date. What happens in effect? Well, the Fed basically receives a ton of cash, and the banks receive a ton of securities. In this situation, the banks are the pawn shop, and the Fed is the person walking into the pawn shop. That's what's been happening to a wide scale this year and through certain portions of 2020. Banks gave tons of money to the Fed. Now the Fed wants to give the money back and get back its collateral. Now, getting back to the topic at hand and why this is so relevant right now, within the next 10 days, a lot of reverse repos are coming due for hedge funds. What does that mean? Well, it means the end of the loan. If you're thinking of it as a loan, it means the end of the loan. The agreement to repurchase, aka end the collateralized loan, is coming due. And when it comes due, what happens? Well, the Fed goes and pays back the hedge funds, and the hedge funds go and give back the Fed its collateral in terms of securities, usually treasury bills. So basically, hedge funds are going to have a ton of cash, and they're going to be getting rid of a lot of their securities. And I understand that some people have phrased this as the opposite way around, but that's just not the truth. Okay, so what is the effect on AMC stock and the market? Well, going back to the chart, reverse repos tend to go up when there's an abundance of cash, such as after a massive stimulus package, which is why you saw the Fed's overnight reverse repos peak last year, just a few days after the first stimulus package, the CARES Act, was passed on the 27th. On the 31st, reverse repos were at recent highs. Year highs, actually. Banks had a massive inflow of liquidity after that. They got it too quickly, and they poured it all into the Federal Reserve, and you could see that based on the chart. And then as they were able to put it to use, they were able to unload that. And you could see that too over the upcoming days. Then why you saw it skyrocket this year as money circulated in the economy, well, inflation. People were worried about inflation. The big money was worried about inflation, so they didn't want to keep all their cash just sitting around, and they also didn't want to pour it into other assets that they saw as at all-time highs. They had too much money to invest in things, and when you have too much money to invest in things, it's still your money. You're not just going to throw it around trying to buy things at all-time highs that you don't think you can make money off of. Instead, what you do is you put it into the Fed. You put it into the reserves. Banks will basically choose to pour money into the Fed during time periods where they believe that's the safest place for their money. If they have too much liquidity, which means there's just too much money where they don't have a place to put it in the moment, and they're worried about inflation, they're worried about asset prices, they don't see any good deal that's better than putting the money into the bank, which is reasonable if you just had a massive influx of capital and you don't know what to do with it, well, then you're going to put it into the Federal Reserve. So what does this actually mean on the other side when the Fed gives back the cash? Well, it essentially means that banks, institutions, hedge funds, whatever, are going to have a ton more liquidity. And of course, whether this behavior of pouring money back into the Fed is going to change is going to be based on the Fed's policy towards this. And we're going to hear more about that this week. But when you consider how much bank reserves at the Fed have ballooned in the last year, what's coming due is really only a smidgen of the total money still in the system. And the reason, again, that this is so high is because the Fed dumped trillions of dollars into banks as part of quantitative easing. Again, when banks have tons of liquidity, they don't just go and throw money out the windows. They've been pouring money into the Fed because they don't know what else to do with it. There's just so much liquidity, they're drowning. And there's so many different connected factors here. But until the Fed starts unloading its balance sheet, starts selling assets back and taking cash back in, or banks feel confident enough in the economy and asset prices to start buying other things besides just staying in treasury bills, well, it's unlikely that you're going to see these reserves pick down a lot. Now, keep in mind, just to understand the bigger picture here, institutions in the United States have poured tons of money into the stock market and propped up tons of asset classes. And even with all the trillions of dollars they've poured into asset classes over the last year, there's still trillions on the sidelines sitting in reserves that banks don't know what to do with. That's the whole picture of how much damn liquidity there is. Fed gave a tsunami of liquidity. Now, in terms of how this impacts AMC, well, it's certainly possible that some of the securities that hedge funds hold as collateral with the Fed were then put as collateral again. Say you have a treasury bill instead of cash, you can use the treasury bill and borrow against the treasury bill with another party, even though the treasury bill is owned to another party, which in this case is the Fed. That way, if you're a hedge fund, you don't have to deal with all the risks of holding cash, but you also get a lot of the benefits of holding cash. Then you can use that reserved buying power to go and short more stocks. You're allowed more margin because you have more storage there with value in it. So you go to a broker, you say, okay, I have $100 million equivalent of treasury bills. And the broker's like, okay, well, that's pretty safe. We're going to go ahead and give you a ton of margin. You can go and short and distort all you want. Well, if you're a hedge fund and you have that structure and then you now have to go back and give those treasury bills back to the Fed, it's certainly possible that you have to restructure that. And in that process, you may get margin called. You may have to cover some short positions before that even happens. And you could say, hey, well, hedge funds probably thought about that beforehand. And while they may have thought about that ahead of time, they likely didn't anticipate having such a long fight with AMC. So if they do have to restructure their margin, hey, that could be a big challenge for them. They may actually have to cover some of these positions. So certainly depending on the structure of margin at a lot of these hedge funds, which we don't have a lot of information on publicly, could certainly actually see this be a positive catalyst. But I think that this is kind of missing the bigger picture. The facts are the same as they were 2 weeks ago. There are a lot of short sellers who shorted AMC. There's a high potential for a gamma squeeze if this can break and find new momentum after 60. And there's a ticking time bomb for short sellers to cover buying back shares and potentially having a squeeze. So I think that if you're someone who is taking the calculated bet here that AMC's squeeze is worth it, then probably patience is the best virtue. Do I know that AMC is going to squeeze? From the beginning, I've said there's just so many confounding factors here that we just don't know. Is retail going to keep showing up? Is the massive psychology of all these retail traders going to continue to be bullish or bearish? Are people going to start turning on each other? Hopefully not. I don't think that's going to happen. It's a very interesting social experiment. But at the end of the day, who knows? It's a good gamble in the sense that you can learn a lot about how the market works by participating in it. But at the end of the day, there's just so many factors here. Anyways, that caps out the video. If you have any questions, feel free to reach out to us below or join us on Zip Trader Circle. And of course, quick plug, if you'd like to learn how to trade, would like access to our private chat and daily morning briefings where we brief on all the biggest catalysts each and every morning, well, I'll go ahead and put a link to Zip Trader U below. But folks, please only join us if you're going to commit yourself to the process. Practicing paper trading with every single concept and then never giving up when times get tough. The program was thoughtfully created to give you a process to learn and grow, but if you don't complete the structure and dedicate yourself to doing every single lesson and doing it and completing it as designed, then you're not going to get anywhere. When I buy something, I make sure that I'm going to get my money's worth out of it. So I expect you to do the same. And if you'd like to take the leap and join us, I'll go ahead and put a coupon code in the description below. Battlefield75 will get you $75 off before checkout. You just put it in the little add coupon code spot before checkout. And if you're wondering what broker to trade these stocks in, we always like to send new traders over to Webull. I'll put a link to them below as well. And signing up and depositing with the link below will also get you some free stocks. Anyways, have a great day and I'll see you in the next video.